Hello and welcome to the Business Standard Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day. During the pandemic-triggered layoffs, over 1.43 million workers returned to their home state Kerala from Gulf nations. India's overall remittances from the Gulf countries have seen a steep decline, but it was offset by a jump in remittances from the US and some other nations. Let us understand the changing dynamics of inward remittances and what does it mean for India.
India is by far the world's largest recipient of remittances. According to the World Bank, the country received $87 billion in 2021, showing a growth of 4.6%. China and Mexico come next with $53 billion remittances each. India's overall inward remittances remained resilient even during the pandemic, but of late there has been a big shift. An RBI article citing the results of a survey by the central bank said the share of remittances for the Gulf Cooperation Council or GCC region in India's inward remittances is estimated to have declined from more than 50% in 2016-17 to about 30% in 2020-21. Amid steady migration of skilled workers, advanced economies, particularly the US, the UK and Singapore, emerged as big sources of remittances, accounting for 36% of total remittances in 2020-21. The US surpassed the UAE as the top source country, accounting for 23% of total remittances. World Bank too, in its recent report, said that economic recovery in the US was one of the important drivers of India's remittances growth. The decline in remittances from the Gulf countries was due to several reasons. Migration from India to the GCC countries slowed in the last 5 years due to economic slowdown. Then the sluggish oil prices, stricter labor laws, introduction of nationalization policy, higher work permit renewal fees, and taxes played a role. The share of Kerala, Tamil Nadu, and Karnataka, which had strong dominance in the GCC region and were big remittance contributors, has almost halved in 2020-21. They now account for just 25% of total remittances since 2016-17. While Maharashtra has emerged as the top recipient state, surpassing Kerala. The authors of the RBI article argued that the compositional shift in India's migration towards advanced economies, notably the US, the UK, Canada and South Africa, dominated by high-skilled white-collar workers, augurs well for total remittance inflows.
This results reinforcing the finding which we brought out a year back, because half of the Gulf countries, people who returned by Vande Bharat flight, have not paid salaries. The second trend is that it is also gives an indicative of the success of immigration policies in the Gulf countries. They are talking about nationalization, like son of the soil, like Maharashtra is for Maharashtrians. We talk here. They also talk. Am I right? So I think that is being reasonably successful. I think COVID came as an opportunity to implement it much more sharply. So for those people in the Gulf, COVID is a big opportunity to get rid of people. Like many people told me, sir, I came on leave. That's it. My job is gone. So we should not put all our people in the Gulf. We should move people to all the remaining 180 countries in the world. 1.4 million people came to Kerala out of 2.1 million people in the Gulf. 2/3 have returned. Then money has to come down. Am I right? It is a Kerala example, which I am more familiar. Now, how many people who returned, remigrated? that question is still unanswered. It's like a myth. I think some people are migrating. I'm seeing that. What we need is a large scale migration survey. My understanding is that after COVID, migration is going to accelerate. So I was telling to the World Bank, remittances will increase. And also quality of migrants also going up in India now. Not like 1970s, people went with the 8th standard fail and pass.
The decline in the number of foreign workers in GCC is a worrisome trend. Rich Gulf countries, which are trying to diversify away from oil revenue, are favoring their citizens instead of migrants. The World Bank says GCC countries will require more skilled workers, and demand for low-skilled foreign workers will come down in the future. The slow pace of visa and work permit issuance by GCC countries has also become a hurdle to out-migration. The World Bank projects remittances to India to grow 3% in 2022 to $89.6 billion, reflecting a drop in overall migrant stock as a large proportion of returnees from the GCC countries await return. India should begin investing in training its workforce for more skilled jobs in the GCC countries. The pandemic has merely accelerated the change in the underlying dynamics of remittances flow.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Tourism industry was brought to its knees by the pandemic. But just like the outbound flights and inward remittances, it picked up soon. Popular destinations like Goa and Ladakh are now brimming with travelers. Visuals from Ladakh are nothing short of a breather for people living in the plains. But in April this year, when images and videos of tourists driving their SUV through pristine Pangong Lake surfaced on social media platforms, people found it unpleasant. A similar misadventure by tourists in Goa was also widely slammed. Some call it a byproduct of over-tourism. In our next report, we explain the ramifications of over-tourism and how it can be addressed.
The 2013 flash floods that swept away thousands in Uttarakhand is still fresh in the memory. Worn-out posters of missing people can still be seen on the walls in parts of the state. The Uttarakhand High Court had directed the state to halt any construction within 200 meters from the bank of any river in the state. But illegal constructions still dot the riverbeds. And it is not just Uttarakhand. Other parts of the country have also witnessed a drastic jump in tourist footfall and an increased pressure on local infrastructure. From Kashmir to Kanyakumari, tourist spots are bursting at the seams. And this phenomenon is called over-tourism. Globally, countries are now taking steps to protect their tourist spots. Starting January 2023, Venice will charge day trippers between $3 and $10 to limit tourists. Last year, Italy had banned cruise ships from entering Venice following years of warnings that waves generated by them were causing irreparable damage to the foundations of the flood-prone city. Amsterdam and Barcelona have banned new hotel developments in their respective city centers to fight back over-tourism. Half a world away, India's neighbor Bhutan will reopen for international tourists on September 23rd after 2.5 years. The Himalayan kingdom also tripled its sustainable development fee it charges visitors to $200, up from $65. In India, the travel and tourism sector was a $194.3 billion market in 2019, contributing 6.8% to GDP and employing 40 million people. But it comes at a cost. The impact of over-tourism can be social, economic, as well as environmental. According to a 2017 study, major problems associated with tourist overcrowding include alienated local residents, degraded tourist experiences, overloaded infrastructure, damage to nature, and threats to culture and heritage. Over-tourism leads to congestion of public spaces in city centers, rise in real estate prices, loss of residences' purchasing power, commercialization, and environmental deterioration, including waste, noise, air quality, and water quality issues. Rising disposable incomes, young population, and a growing interest in adventure activities are driving tourism demand in India. But India has a poor track record in sustainable tourism. While it has improved its overall rank to 34th position in WEF's Travel and Tourism Competitive Index in 2019, its rank under environment sustainability has been 139, 134, and 128, respectively, in 2015, 2017, and 2019.
It is unfortunate that tourism has to reach a stage where we have to restrict. It's kind of counterintuitive. You create demand for a place and then you tell people, oh no, we don't want you to come. Some destinations have realized it's too much. Some still haven't realized. There is the historical aspect of the monuments that you want to see and all that. But there is this socio-cultural aspect of a destination, which if destroyed, the destination is destroyed. So that's happening as far as Venice is concerned. So will Venice have the courage to say, no, not €5. I am going to charge, 50 euros for somebody to come. That is when you truly restrict the number of guests who will come there. It'll probably drop by half. And then with that money, they can see whether through the subsea sort of engineering, they can patch the foundations and do something to keep Venice standing. Preservation of history and culture trumps satisfying sections of the population who cannot afford to go there. If there is too much tourism, it can destroy a destination. And then we call that a declining destination. Sri Lanka was heading that way. A lot of the beaches in Goa are heading that way. There is some evidence that the houseboat segment in Kerala is heading that way because you have this huge proliferation of number of houseboats dumping whatever waste into the rivers.
India's domestic tourists increased 9 times from 270 million in 2002 to 2.32 billion in 2019, consistently constituting 99% of overall tourists. But most tourists also leave a trail of destruction. Every year, the roads leading up to hill stations across India witness thousands of vehicles getting stuck in horrible traffic jams. From trekking in Himachal Pradesh, rafting in Uttarakhand, to parasailing in Goa, thrill-seeking Indians are also leading the rapid growth in demand for adventure tourism in some of the most sensitive ecological hotspots. Popular hill destinations, particularly those in the Himalayan region, are testing their carrying capacities.
We see there is a lot of awareness among people to ensure sustainable tourism in economic terms, in social terms, and in environmental terms. What we see today as a supply-demand issue, we also have to keep in mind while the demand increases, supply side also increases in the form of more destinations that are similar or equal to the currently popular ones opening up, more infrastructure development happening, and more and more options actually being made available. That being said, some very popular destinations or some very unique historical monuments or features would require a bit of control, but again, that is still quite some way to go. As a last option, there are ways in which that demand can be controlled in terms of controlling the number of rooms or controlling the number of vehicles allowed.
The effects of over-tourism are severe. Many destinations are at risk of losing their appeal as desirable tourism destinations, which helps no one. An example of authorities taking extreme measures against over-tourism is Thailand's Maya Bay. The white sand beach reopened in January this year after being closed for 3 years. The break was required for coral reefs to recover from the damage by constant tourist activities. But it will be closed again from August to September. In India, private and public infrastructure needs to catch up with the current demand and prepare for the coming decades as well. The stakeholders should act before the damage done becomes irreversible by creating a sustainable balance between visitor numbers and the conservation of natural and cultural heritage.
क्या हाल?
मत पूछ यार,
फिर से स्टॉक्स में फंस गया। तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
From tourism, let us move on to markets. After IT majors Tata Consultancy Services and HCL Technologies disappointed the street with somber June quarter numbers, analysts expect Infosys and Wipro to follow a similar trend. Our next report tells what investors should expect from Infosys and Wipro in Q1 and key factors to watch out.
After a quiet stage set by TCS and HCL Tech in Q1, Wipro and Infosys are next in line to report their June quarter 2022 results on Wednesday, July 20 and Sunday, July 24, respectively. The IT industry continues to battle unprecedented levels of attrition, which climbed 19.7% year-on-year at TCS. At HCL Technologies, attrition rate grew at 23.8% year-on-year in Q1 FY23. Analysts believed employee exits would be within a similar range for Wipro and Infosys on the back of supply-side pressures like wage inflation, travel costs, and seasonality. This would lead to EBIT margin contraction in the range of 50 to 70 basis points quarter-on-quarter to 16% for Wipro and 21% for Infosys.
On margin front, Infosys EBIT margin is expected to decline by 70 bps quarter-on-quarter to 20.9% due to wage revision, retention expenses, and increasing travel expenses. Wipro's EBIT margin in IT services is expected to decline by 50 bps quarter-on-quarter owing to supply side pressure and rising travel expenses. Margin headwinds will be partially offset by rupee depreciation. Deal bookings of Infosys is expected to remain healthy at $2.5 billion to $3 billion, implying a sequential increase of 11% to 33%. We expect Infosys to retain 13 to 15% CC revenue growth and 21 to 23% EBIT margin guidance, while Wipro is expected to guide for 3 to 5% quarter-on-quarter CC growth for Q2, which will include 1.2% contribution from its acquisition. High attrition will remain a worrying factor for these companies in the medium term. Key factors to watch: first, impact of macros on technology spending of clients or deferment of projects. Second, large deal momentum and pipeline. Third, margin outlook given supply side pressure and increasing travel expenses.
That said, modest revenue growth is expected to offset margin pressure due to strong deal pipeline.
We are expecting Infosys is likely to report 5.2% of the revenue growth on quarter-on-quarter basis. However, the margins are likely to remain under pressure because of the higher supply side constraint, wage hikes, and more on-site expenses. However, we are expecting Infi likely to do better in terms of verticals and in terms of geographical revenue growth momentum as compared to TCS. In case of the Wipro, we are expecting 3.5% of the revenue growth momentum on quarter-on-quarter basis. The margins, however, are likely to remain tepid because of the higher supply side constraints. The key monitorable things are commentary on the supply side constraint, the employee hiring and attrition ratio, and the demand scenario across geographies.
These pressure points have also been captured in the stock prices as well. So far in the calendar year, shares of Infosys, Wipro, TCS and HCL Technologies have shed up to 43%. In comparison, benchmark indices Nifty 50 and the S&P BSE Sensex have bled around 6% each. As regards today, FII flows, global sentiments, crude oil prices and rupee movement will guide markets. Besides, HUL, HDFC Life, Ambuja Cements, ICICI Lombard, AU Small Finance Bank will report their June results.
तुम इतना डर गए? क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Meanwhile, early this week, markets regulator SEBI approached police alleging that someone gained access to email accounts of several employees. A battle to ward off intruders from accessing personal and official information is on. And amid all this, Apple is going to introduce a new feature in iPhones for an additional layer of protection. Let us know more about it. iPhone maker Apple has announced the launch of a called the lockdown mode that offers an additional layer of protection to users who may be at risk of highly targeted hacking attacks. Apple says the optional feature is aimed at offering extreme protection for a very small number of users, such as journalists, human rights advocates, and political dissidents who could be subject to attacks like those launched by the clients of NSO Group or other private companies developing state-sponsored mercenary spyware. The feature will come to iOS 16, iPadOS 16 and macOS Ventura towards the end of September. The US tech giant's move comes after at least 2 Israeli firms, NSO Group and Cellebrite, have exploited flaws in Apple's software to remotely break into iPhones without the target needing to click or tap anything. NSO Group, which makes the sophisticated spyware Pegasus and license it to government agencies and law enforcement authorities around the world, has been sued by Apple in the US. Toggling on lockdown mode from the privacy menu of the Settings app will strictly limit certain functionalities after a warning message to the users. When the tool is active, most types of attachments on messages will be blocked and some features like link previews will be disabled. Incoming FaceTime calls will be blocked if the user has not previously called the initiator or sent a request for a call. The new mode will also block wired connections to iPhones when the handsets are locked. Configuration profiles, such as profiles for school or work, cannot be installed, while some web technologies and browsing features will be blocked. Apple also said it would pay researchers a security bounty of as much as $2 million if they find ways to bypass lockdown mode and help improve its protections. Apple said it will continue to strengthen the mode and add new protections to it over time.
I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
NSO Group's Pegasus was reportedly found on the phones of people close to slain journalist Jamal Khashoggi. That is all for today. For more news, views and analysis, please log into business-standard.com. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.